Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It must be Monday because, like, everything's all screwed up here. Hold on a second. Oh, I don't think I've ever had a worse start to the stream. Oh, man. Okay, so my control center here is kind of screwy. Let's fix that. Better. All right, guys, it is Wednesday, but really, because of a holiday, it's like it's second Wednesday. So it's like it's second Monday. Second Monday. Good grief. Okay. For the charts. All right. Well, Treasury is pretty much where they were, although trending to the downside off of the open here. And a decent amounts of volume on that too, by the way, for an open. S&P 500 also falling this morning. Oil on the rise a little bit. The Saudis really doing everything they can to try and support the oil market. Gold and silver. Kappa having a bad day this morning. You know, there's been some, I don't know, as of late, a little bit of downtrend in copper and some concerns about global growth in China still. Bitcoin also moving down towards its lows, not beating out the lows from when that story that, like, the Bitcoin ETF isn't really going to happen came through, but to the downside nonetheless. And the dollar, well, still doing okay, but pretty close to where we've been, 102.67, 102.7, so like 20 cents higher than where we were on Monday, I guess you could say. So that's where we're at. And yeah, it really looks like it's a sell the treasuries day, man. They are coming in pretty decidedly short. So today we don't have a whole lot of data. Well, I mean, Redbook is kind of not like a big mover though. Then at 10 o'clock Eastern time, we got factory orders, durable goods. And then at noon, we got FOMC meeting minutes. So I suspect that what we're probably going to get here in the treasuries is very gradual selling until those FOMC minutes, which means we probably could go short here, but I'm not too sure if it's going to be super fast, right? This might be one where we could go short here, the treasuries, and maybe make a few ticks. But I don't think it's going to be super strong or anything. Okay, meanwhile, what's going on with the Twitter? It looks like TweetDeck is still working. They are going to be putting TweetDeck behind a paywall, by the way. I don't know if Twitter's going to survive, guys. There's kind of like a bunch of weird things going on with Twitter that kind of make me suspect that Twitter is actually in much more dire straits than we realize. We'll see, though. Interesting. Somebody in chat pointing out that the transition to SOFR markets could change how Forex moves. So that is interesting. Oh, we got 3 ticks up there in the treasuries real quick. Make sure my new squawk is going here. AI generated Breaking Bad in the style of Pixar. Oh my gosh. Just kind of checking around the internet, but it doesn't look like most of the United States has really woken up yet. So that's interesting. Big order at 25. I'm going to reset right here. That's really odd. I kind of find a big order this early in the session that really perks my interest. It's to the long side, so it's, I'm expecting selling. It's to the long side. So that, I'm a little suspicious. But the earlier in the session I see stuff like that, my general rule is the more likely it is to be real. So, but it was kind of like a real, hey, good morning, Uzi. It really, it turned around. I don't recall. I wish I had been paying attention better. We moved up 3 ticks. I don't recall if that big order was there or not. I think, though, we can afford to kind of just wait on it. Eurozone PPI dumps into deflation, PMI's plunge. Lazard. I am not familiar with that company. Senior Lazard banker terminated due to inappropriate behavior. Secret Service investigating how cocaine. I've been following this story. The Secret Service investigating how cocaine got in the White House. This story has actually been around. I think it was been since Monday, but I'm only just now seeing like social media and everything else kind of pick up on it. It's kind of funny. Like, I think at first, they didn't want to report on it because they thought maybe it could be like the rumor was that it was Hunter Biden's. But my understanding is that it appeared in an area where tourists have access to. And so it was most likely from a tourist. So it's like now that they know that, the media is willing to report on it or something. I don't know. But it's a kind of interesting how all of a sudden 2 days later, it's like a top story on Reddit and Zero Hedges because I saw conservative news websites pick it up on Monday. So. Of course, that just brings me back to we're seeing the entire social media landscape potentially get rewritten. It's found in the kitchen. No. They found that it really was drugs. It really was drugs. So did you see that Facebook was launching a Twitter competitor that's like hooked into that's hooked into Snapchat? Threads, that's right, Threads. I'm like, what? That one is kind of weird to me because like Facebook is already kind of like the whole thing is that way back in the day when Twitter first came to like national consciousness, and I think one of the main reasons that it kind of did so was because the media personalities all got on Twitter, right? So then Facebook added status updates to Facebook to make Facebook kind of like Twitter. And so the whole thing was like, you can kind of use Facebook like Twitter, but nobody does that. So now they're making this competing project called Threads, which as far as I can tell, based on, I haven't used it yet, but just based on their description, it's like a more Twitter-like interface to Instagram because it connects into Instagram. So like, how is that not just Instagram with a more Twitter-like interface or something? You know what I mean? Like, screw Meta, their products are trash. The whole thing is just weird to me. And meanwhile, Elon Musk has been like rate limiting the number of tweets you can see per day. You know what, though? On that one is weird, too. Here's the weird thing about that one. Everybody's complaining about Twitter, but the only people that should be affected by a limit like that should be power users. It's going to be like these nincompoop media personalities that literally sit and watch Twitter all day. That actually stopped happening on my end on Monday. Over the weekend, I couldn't browse Twitter at all. By Monday, I was back down. Well, it should reset every day, right? that people are also complaining that TweetDeck was down. It looks like the new TweetDeck is okay still. So, but by the end of the month, TweetDeck is going to be a premium feature, meaning that you have to be a verified, you have to pay and be a verified account in order to pay for it. Or rather, in order to get it. And I think I probably would get that, but like, well, that's right. Tucker Carlson is on Twitter. So I kind of suspect that maybe the situation at Twitter is not as dire as it seems, because these people in media, like I don't think we realize how significantly that affects the narratives that we get out of the mainstream media. Because the mainstream media has been obsessed with Twitter. That's why when Elon Musk took Twitter over, it was like they were apoplectic. Like they were just losing their minds. It's because they literally spend their whole day on Twitter. The average person doesn't. The average person does not give a crap about Twitter. The average person goes on Twitter and is, it's like, oh, I'm shouting into a void and nothing happens. Right? There's things that make Twitter better than anything Facebook has. One of them being the fact that my place in the feed isn't reset every time I minimize the app. Oh, dude. Okay. Like when you're on Instagram and you open up Instagram for the first time that day, and you'll see a post and you're like, oh, that's an interesting post. Or for my feed, it's like, oh, she looks kind of cute. And then it refreshes and you lose that post. Oh, so annoying. Yep. And then Facebook does not really actually show you the content that you want. It picks like 10 people that it thinks you are like the most connected to, and then it shows you stuff from them, and it doesn't like show you your whole feed unless you change it to chronological. So I saw, what was the name of this website? I had just seen a TikTok that was doing pretty well for a website. It was called pocketrides.com. And it seemed kind of interesting. They had done a couple of things well, but I also think that it was a little naive. So they are, I think it's seems like more like a Reddit kind of clone, except for that, like, everybody is supposed to create their own pocket. So like everybody's supposed to create their own micro community. And I guess that's probably how they expect to like grow the service. And you have to pay $5 a month to use it. And they say there are no algorithms. I'm like, well, there's an algorithm determining what shows up on your page, right? But probably that algorithm is just like, show me the most recent posts from the places that I follow. Is what they're saying, what they're claiming their algorithm is, which I'm not sure would make much sense, because you'd want like, wouldn't you want a popularity based feed? I don't know. So that's kind of weird. But then the thing is that you pay $5 a month, and you get likes. Like, you're only allowed to do 250 upvotes a month or something like that. And then if you submit something and it gets upvotes, you get that money. So that was interesting, because they're like, their whole thing was like, it's billionaire proof. And I'm like, well, I'm not really sure, to be honest with you. I'm not entirely sure that billionaires are the real problem on Reddit and Twitter. That again sounds to me like you've been obsessed with Twitter and you hate Elon Musk. But what concerns me is where a large group of users will get on a platform with the intent to boost some content and bury other content, right? That's the larger thing that I see, is that half of the country basically does not get what they want out of social media and from news and so forth, because the stories that they are interested in get buried by the other side of the aisle. Because that's what happens, is the left comes in and they bury anything that's conservative, and the whole point is to try and keep conservatives off of social media. This may be a dumb question, but thoughts on DX feed is good band. So I thought that the data that they provided was pretty good. You got to keep in mind that the products of theirs that I've used are data only and not execution. So that kind of matters greatly, right? But you can use DX feed and you can get stocks data for a pretty reasonable amount. I think that if I was going to trade a bigger clip and I was going to trade stocks, that I would probably use that. Yeah, frequently Facebook thinks the most recent is 3 to 5 days ago from a select group of 20 to 25 friends. Yep. I mean, it goes to show that I spend more time on social media than probably the average person. But the difference is that I've never had a social media that I've really liked, that I felt comfortable like calling home, since Dig. Like on Dig, I was all in on that, right? Until it like died. And honestly, I kind of felt like it died for dumb reasons. I honestly, at the time when Dig was collapsing, I basically thought that people were exaggerating the problems because they wanted everybody to move over to Reddit where they had more power. Like, because the whole thing was there was Reddit, right? And there was a couple of power users where it was like, if the power user submitted something, then that story was going to go to the front page or whatever, right? And then what happened was the politics got involved, and it got to the point where it was nothing but Barack Obama on the front page of Dig, and people got pretty sick of that. And so then the conservatives like kind of figured out what they were doing and started to do the same, like a similar thing. I think one of my plants has attracted these fruit flies, and I killed 2 of them, but I think there's a third one, and I wanted to kill it, but it's a sneaky. He's a sneaky one. Anyways, so then they made Reddit. And Reddit was kind of just like a Dig alternative. But the thing that happened on Reddit was they made the subreddits, and then you had the moderators. And so on Reddit, the moderators ended up having all of the power instead of the power users like it did on Dig. And so what happened was there was political capture of the moderation system on Reddit. And so the political content on Reddit was even more tilted than it was on Dig. And it was like super tilted on Dig, right? And that kind of brings you to the current situation where then Reddit started making API changes. And those super powerful moderators were like, nope. Right? That's who had the power on Reddit. So where does it go from here? Well, there's not really a viable alternative to Reddit right now. I mean, in some respects, it's going to be a lot harder to replace Reddit than it was for Reddit to replace Dig, because Reddit has subreddits, right? And so that's kind of a more complicated architecture. Like that's something that's really difficult to bootstrap, right? But there are a couple of websites that are popping up, and a lot of people are shifting over. Another one of the problems is that the solutions that all of the influencers and moderators and so forth are trying to push everybody to, like Mastodon and so forth, they just suck. Like I'm sorry, but they just suck. What is the Reddit one? There's Mastodon is kind of more like Twitter. And then there's this other one, Lenny. That's right, Lenny. Lenny is more like Reddit. And this is, they call it the Fediverse because it's basically like federated servers that connect together. But then there's all this drama between like this server doesn't like this server and they block each other's content and you have to join all of these different servers and all this nonsense. Like it's just like a big mess. And it's this big mess that like power users and like techie people will maybe be interested in, but all of the general public goes and tries to use those things and they're like, what the hell is this? And they don't use it. So those ones have not taken off because of that. Facebook is just, I want to show my friends this picture and Facebook won't show it to anyone. Well, so one of the things that happened with me with Facebook was I started doing the DJ thing. And so I was adding as many friends as I could. And there was a lot of stuff going on with events. So it used to be that if I wanted to make an event, like if I wanted to have a music, like a couple of times I organized a producer meetup at a coffee place. So like all I had to do was go to the place and get the place like booked and then go and make the Facebook event and invite my people to the Facebook event. And then they would invite other people to the Facebook event and it would make, and that's what would make the event. And you could promote an event, like a local event, purely through Facebook. And it was awesome, right? And then Facebook came in and they're like, oh, no, we can't allow you to actually, benefit from our social media network. We have to make all of the profit. So then they started doing this thing where they started screwing up your feed and you didn't show that stuff and they kind of muted events in your feeds and people don't use it for that anymore. And it's just like, they nerfed Facebook so hard. And I knew that people would like not like it, but I didn't realize how long it would languish for, because that's like 10 years ago now. It's been a long time like that. But yes, Twitter makes it easy to follow people. How Twitter ended up taking off was kind of weird too, because like it was all integrated with your phone, and that's why the length of a tweet was limited and stuff like that. And the weird one about Twitter is that should be like an easy application to make. It's like a really narrow use case that you can really aggressively. It's a difficult problem from a performance perspective, but as you grow, you deal with those problems. There were so many different websites that tried to become Twitter killers, and they all failed. And now, because Elon Musk owns Twitter, now there's actually a push to move off of Twitter onto something else. Because I've never liked Twitter's community. From day one on Twitter, it was like, this is run by all of the liberal nannies that don't like anything, and a bunch of people just saying stupid stuff. Like a lot of people blame Twitter's problems on like, well, you can only say so much with so many characters and this and that. I really think that it was a cultural thing from the very beginning. Like they had community managers and all this stuff from day one, you know, pushing, and that's why they had so many employees, by the way, was because Twitter exerted a lot more influence over who become popular and who doesn't than you think, you know. And I see this all freaking over the place, man. Like I've basically given up on making TikTok content because what'll happen? I used to be, I come in, I'd make a video about a controversial issue, I'd make a good video, and then it would pop off, you know, and that could happen every once in a while, right? Now, every time that one of my videos starts popping off, like, you know, I release it, and in the first 30 minutes, I get like 20 comments, and I'm like having a hard time keeping up with it and everything, and then the video just gets killed. Just gets killed. Like, out of nowhere. Everybody's commenting, and then it's like, it doesn't get shown to anybody. Or other times, I'll have times where I post a video, and the algorithm just doesn't show it. Because normally you should get like 200 views at least. I'm telling you. TikTok throttles. TikTok throttles. There are some creators, and they're almost all conservative, that they have a dedicated enough fan base that they're able to get through it. And it's so ridiculous because these guys are constantly fighting against being taken off the platform. Like, they're constantly having videos taken down, and their accounts getting warnings, and having to make alternate accounts and stuff like that. And then you go over to these liberal creators, and the liberal creators are literally like breaking all of the rules, attacking people for you know, also, you know, like, for instance, I had a video that went pretty well, and then this creator went after me, and her whole horde was just like, "You're a man and you're bald." And like, all the comments were attacking me for being bald. Like, that is not, that is against the platform rules. And like, everything that she did was against the platform rules. And they even, like, I think the one that really bothered me about that was that, like, she put the video up and they took it down, and she just kept doing it until they left it up. And then she sent the hordes after me, which was like, well, they forgot about it a week later. But like, why is it that the conservative creators, you know, get throttled and their accounts taken down, and these insane liberal ones are able to do whatever the hell they want, and they almost like get rewarded for it, right? Like, creating the drama, they thrive on that drama and become bigger and bigger because of it. It's ridiculous. And I'm not going to say that like YouTube is perfect, but at this point, I would rather make YouTube shorts than TikToks. Not only that, but like, the kind of content on TikTok has changed. Like, the funny short videos, you know, like the thing that really made TikTok cool in the beginning, like, they changed that because TikTok wanted to promote longer form content. So they promote longer form content, but so they want creators to spend a minute, but then they don't reward creators at all. So it's like more effort, because that was the thing, is like, you could go and make a TikTok and you could have a video that would be really beneficial to people and go viral with hardly any effort on your part. Now it's like you have to put all of this effort in and you get nothing out of it. Like, nobody even sees it. So dumb. Yeah, I'd rather just not. And it kind of irks me because it's like, well, Seth, you should be doing stuff to try and promote your YouTube channel and help your community out. And one of those things is to post a TikTok every day. So it kind of makes me feel guilty, but you know, I don't want to make them. So I've just kind of eventually came to the conclusion that, like, no, let's just not make them. Because like I'll go away for a while and I'll bring one, and then I have a video that starts to do well, and it immediately gets killed. Yes, so social media, interesting thing. We're in a turning point in social media, and who knows where it goes. Well, those big orders that we had at 25 are no longer down there. We moved up to the other side of the range. Market kind of seems to be, I don't know if too much super interesting action will happen here today until the Fed meeting minutes. So, hey, good morning, Gus. How have you guys been doing with your... I've been helping them with a little bit of programming. Oh, yeah, that's right. So one of the problems that I've been having with this, that I've been working with the data set, is that they're working on this data set that gives you like multiple depth, and I'm not using that part of it yet. Actually, now might be a good time for me to finish that. So I was almost done. You think you got it figured out for the most part? Yeah, that's right. So I have it giving me volume point of controls now. I haven't been able to like verify them. Like I figured I'll finish writing it and then do that. But now I need to do value area. And I'm wondering if there's a sneaky, not a sneaky, but like a really efficient Python way to write it, or if I should just, do it all myself. Well, here's one, but it doesn't go into it. It's just links a place. Only 3 days were messed up. Well, I really do wonder if it was did you have to like download sections individually or something? Because I'm wondering why it was like certain files would be corrupted and stuff. But it was also, it must be like that because otherwise why would their years be in zip files too? Having the individual files in GZ files is a different thing because pandas can load a CSV that's encrypted. Like there's a specific attribute in there to just specify what the encryption is essentially. Yeah, well, when you're downloading that, because you're talking about a couple 100 gigabytes, right? You download a file that big, the chances of like 1 bit getting screwed up here and there, like it's could happen. That happens all the time, except for it's like it's an image file and nothing notices. But when it happens to a zip file, then you can't open the zip file, right? Okay, let's see here. Oh, this is lame. PY market profile. Yeah. I think I'm going to have to write it to myself. I think I know how to do it, though. I need to let it load up a little bit first. Def. Yeah. Value area. Self. Comma. Vol bars. Colon. I should make this a little bit smaller so we can still see the treasuries going on here. Okay. Comma POC index. So then I have to say vol bars. Let's see here. Trying to okay, I think it's a 0. Okay. I want to get the sum of the array. I think I just do numpy.sum, but I gotta double check here. Yeah. Total vol equals numpy or np dot sum vol bars of 0. Okay, I don't think I need to pass anything into that. And then I have to say, area. No, I don't think I actually need to do that. Okay, so then what I need to do is I need to say, what should I call this variable? Area of volume equals vol bars 0 POC index. And then I can say while area vol is less than total vol times 0.7 colon oh, do I need to use an I? Yeah, let's do it. Area vol plus I. No, plus vol bars of 0 I. J. If I hold on a second. Is it less than or less than equal to? I'm going to say if I is greater than or equal to 0, and we do I. And I minus. Oh. Minus equals 1. Forget that Python doesn't like that. If J is less than vol bars of 0 forget what the array length. Use len to return the length of an array. If J is less than length of volume bars of 0. J plus equals 1. Okay. And then we can say return vol bars of 1 I. Should we return the high first or the low first? Does it matter? I think we're returning a tuple here. Let me double check this in Python. Yeah, I think that all I have to do is return this, comma, vol bars 1 of J That should be it. Vol bars, POC. Okay. Let's see if that gives me something. There's still kind of pushing the upper side of this, although it's kind of just been in a cluster here for a while in the treasuries, so it kind of looks like it's not doing anything, but there could be a breakout coming on here. Oh. CD Python few trades. Oops. There we go. Here we go. Well, that is taking longer to process the day than it did when it was just the value area, so... Oh, that's never going to finish because... this needs to be plus equals. Okay, so let's just cancel that real quick. Value area high is less than the low. And the point of control is somewhere in the middle. It appears to be working. It appears to be working. I'm going to have to run it through, you know, the whole data set and then come to like more recent days before I can really know for sure. I don't have the part to write to a file yet. I had this problem at work the other day where like when you try and write to a file on this machine, you like didn't have permissions, but if you ran it through a command, you did, and so that was so annoying. Oh. That's probably not the best way to do this. I probably should have some way of, well, I need to add some air handling into things so that, like, if stuff actually gets screwed up, no, you know what? Here's what I can do. Okay. Off trading topic, have you heard of an embedded OS named Talk? I've never heard of that, but it's 100% Rust. For running applications on low memory, low power microcontrollers? Not something I do a whole lot of though, so I could see why I wouldn't be familiar with it. Okay. What we really need to do is with open self dot out file, comma, W as F. I think we need to pass all this stuff on, huh? I'm gonna do it this way. So process year, process day. Now, here's where I think what we should do is we should say, Okay. Probably forgot something major here. Okay, so I ran into an error, but... Okay, two problems. One is that index error, but the other one is when we write, we need to include the dash n. I forget if I need to do 2 slashes there or not, but... Okay, line 102. Okay, that's interesting. So first of all, the day that it is processing is there's something wrong with that day. It's probably like a holiday or something. 0116, like maybe President's Day or something. But it should be here if I is greater than or equal to 0. Oh, I have some things around backwards here, don't I? Okay. That appeared to fix the issue. I'm going to control C here. Oh, well, sounds like our music died here. Hold on. Okay. That all seems correct. So after the stream, I'm going to have to go through and see. Yes, and it does give them their own column. So I will have to go through and you know, run the whole set. I don't want to do that during the stream because that's going to be extra processor cycles. But I should be able to run the back tests today. You might like Bloomberg's new TV layout. Oh. Okay. I don't know if that's going to get me to watch Bloomberg instead of CNBC still. Sorry, I had to. Let's come over here to Zero Hedge, see if they got any new interesting stories. Teamsters say UPS negotiations collapses. Nationwide strikes still possible. That would be a problem. No, it seems that the market is still pretty quiet. Oh, let's see here. First squawk, London Metal Exchange changes to daily price limits for certain base metal contracts. Okay. Iranian naval vessel fired shots during second attempted seizure. Oh, this was 43 minutes ago and I missed it. U.S. Navy says Iran tried to seize 2 oil tankers near the Strait of Hormuz and fired shots at one of them. That's still going on then, huh? Oh, here's an interesting one from Steve Leishman. Wall Street consensus for jobs has underestimated job growth for 13 straight months and in 18 of the past 24 by an average of 109K jobs per month. Add it all up, and Wall Street has forecast 2.6 million fewer jobs than have been created. Also, it's not getting better. Year to date, the average miss is 110K. Well, yeah, except for that, then they get revised down later. Well, spoos are doing okay here. I guess if like nothing major is happening, then that's probably a good thing for equities overall, right? It's only a slight up. They're still down in the overnight session. What? New Jersey judge under investigation for quote unquote sexual TikTok videos of him lip syncing to Rihanna and Busta Rhymes. Really? Okay. Not that a judge should be doing something like that, but people shouldn't care either. I don't know. Well, I mean, rates are on the upswing, and there was some data overnight that was kind of like PMIs in Europe and China that were bad. And so you could see yields come back here a little bit, and that would be overall positive for the stock market. I mean, like if the treasuries were really sold, they didn't, I kind of expected that they might, but they didn't. If they did, then maybe it would be a different story in equities. I don't know. Tell you what, we've been trading this range in the treasury for an awfully long time too, haven't we? Like it has been sitting here at regular session highs for like, man, when did it first touch it? Well over 30 minutes. Hmm. See, when that 29.5 goes bid, they're not really reaching for 30 very much. It's just a little weird. I don't think I've seen it sit at a swing high area like this for such a long time, and only 446 is traded at 30. I mean, it's been an okay turn to the upside, but like if that's the best they can muster, then it could be ugly if they ever decide to sell it. Oh, by the way, a pretty big order there on the offer in the 5-year too. It's time to switch my contacts out. This right contact does not seem to be seeing as well as it should. This one offer is just not, they're just not going for it. I guess when I look at like correlated assets like the Japanese yen has also been sitting in this range. Despite the dollar kind of bouncing a little bit here. And also, gold kind of selling a little bit. Oh, that's right. We do have some numbers at the top of the hour. Like News Squawk just reminding me. Now they're 2 ticks lower. But that's still just where they've been in this range. I'm really I don't know why. Maybe I'm just getting bored, but I'm kind of tempted to try and do something here because this range has been really tight, and like I'm kind of leaning towards selling it too. Hey Walter, how have you been? I really don't think that the context is very good for a trade like that, though. Well, look at that. As soon as I say it, he goes down 2 ticks. So now you're at 29.5. That would have been an okay entry within the range. 28, on the other hand, is a terrible one. Oh, you have a question? Well, you should just ask the question then. Never wait for me to be ready to ask a question. Just ask it. I almost always, and if I don't get to it, you just post it again later. To watch currency futures and ES, can it work with Sierra Chart's Denali data? Probably. So, I don't know how the Denali data works, but you know, the CME, the way that it works on the CME side is that you can pay for individual products, right? So, like, if you want the cheapest data, then you can get just the S&P 500. But there's also the bundle, which basically gives you all of those. So if you have the bundle, then you should be able to access FX futures. $11? Well, so like I think the CME themselves charges like 20 or 30 for it. But with Denali data, that maybe varies. Yeah. Well, yeah, exactly. Well, okay. Kulud's probably right. It is possible that they could be bundling those fees into some other part of the platform cost, but never done it with Sierra charts, but I'm little. Well, so really, this is a question you should be asking Denali, right? They have free delayed data. Okay. I mean, they have salespeople for exactly this sort of thing, right? I remember there was like an application, a web app that was like a trading contest sort of a thing, and it was all running on delayed data. So like that's dumb, right? Because then anybody with live data can just predict the future essentially. Full CME group top of the book is 3.5 USD a month. Just check. So top of the book, I think, just means that it only shows the best bid, best offer. And what you want is full depth. Yeah. And Kulud is saying the same. Can only see current bid ask. No, you want the full market depth. Or full depth of market, or whatever you want to call it. So 35. So it'd be a total of $71 monthly, including the package returns. Yeah. Okay, so we're getting ready for the news here. See all of the, well, not all of it, but a substantial portion of the liquidity has pulled here. I bet you that 10 seconds before it might get worse. The U.S. factory orders month over month is the bigger number here. Forecast spot 8%. Yeah, there you go. All the liquidity pulled. Yeah, factory orders 0 spot 3. So they did bust up through the top there, but only by a tick before backing off again. Come on, you gotta have more in you than that, right? U.S. durable goods revised 1.8% versus expected 1.4 at spot 7 versus spot 6. Anyways, this is where I feel like a lot of people get deceived by Sierra charts because it seems like it's cheaper than like Jigsaw's $50 a month live trading license. But when you actually factor everything together with their data fees, it comes out to being about the same amount. It just kind of it gets hidden because in Sierra charts, it's all in the right. Because I'm paying basically 35 plus 50, so it's like 85 versus $75, right? $10 more. Good call on the short. Oh, I don't think that one counts. I don't think that one counts, man. Because I was talking about, well, you know, I really want to do something here to sell it, but I don't think the context it makes sense, so I didn't do anything. And then you had news. I mean, like the news cancels any of that out, so I didn't try and make some prediction about the news or anything like that. So don't try and credit me on that. That doesn't count. Plus, who knows what it does from here? Because again, on the initial news, it spiked up there and it made a new high by 1 tick, and then came back. So, I'm not sure we can really say with any confidence what it's going to do from here. For all we know, it's just going to return back to that 28.5 range and do nothing. Yeah, the CME fees are universal. Yeah, it is. And what it really comes down to is why are the CME fees, data fees, so expensive? Well, whatever. It's been a long time since they raised it, so I guess we're well past the time that we should no longer be upset about it, right? You don't understand why the futures markets are not open on the weekend? Well, I can explain it. Professionals actually have lives on the weekend. Oh yeah, I did do the recording on Saturday. And there's a little bit of data processing that I've still got to do. Earlier in the stream, I did a little bit of the programming for that. So I've got to go and run that all the way through and verify the results, verify that I'm actually getting correct information out of it. And then, you know, run the back tests again using the further back data. On the instant, there are way more market sells hitting the bid compared to buys lifting the offer, but prices moved up rather than down. Well, so first of all, that's not what some of my metrics suggest. But that can happen. So, you know, if somebody is iceberging on the bid and is passively bidding, then you could see a lot of market sells into that bid and still see price rise, right? Because the buyer is being passive. Also, in ES, you got to remember that it is a derivative, so it could be that they're like selling the futures and buying the individual stocks. That can happen too, right? But when I come in here on my charts and I look at the ES here just for this session, and I look at my cumulative delta is to the upside. That is to say that there have been more market buys than market sells overall. So if it seems like that's not what's happening, you might want to just keep a close eye on the DOM. There might be something you're missing. Like it might be that it seems like, you know, they're selling, it's really slow and gentle, but then when it upticks, it's like a bunch all at once or something like that, you know? And so you're missing that, like that big buy that is kind of canceling everything out. Some people, well, I don't think that he's... Listen, when you watch the DOM and you see the orders, the orders are what they are, right? But what he's saying doesn't match up with what I'm seeing for the orders. So we got to figure out why he's not seeing it correctly. Because cumulative delta has been long. That is to say all market buys minus all market sells. There is vegan. Oh man, where was it? I saw somewhere there was like a place that was like a brand that was based on caviar. I was like, what? That's the thing. How's your brother? It was okay. Yeah, you know, we keep getting this weird thing. I don't know if it was always this way, because I thought, okay, when I was a kid, what happened is here we're in the city that I live in. There would be a parade, and then after the parade, there would be like a carnival and booths. Now, something's kind of changed because the booths were used to be all of the scout troops. Each scout troop had their own booth, but then the LDS church got rid of scouts. So now there aren't any scout troops, and so they don't do that anymore. But the past few years, they have still been doing like a carnival and like a free concert sort of a thing, but they're not doing it on the 4th of July like they did it on Saturday. And so I'm not sure what's going on. So like we'll get done with the parade. Like when we're done with the parade, my son did not want to go home. He was really mad about going home. So we went out to a park, and then he didn't want to come back from the park. And then we got fireworks. He didn't want to go get fireworks, but when we brought him back, the fireworks woke him back up. And so he finally had an experience with fireworks, because all the other years he fell asleep. So yeah, that was our 4th. Nothing too special. Vegan caviar, olive oil, water, ginger, dried dulce, dried nori. I don't know what those are. So the thing is I remember there was this guy when I was a missionary. We were in Lawrence, which is where Kansas State University is. Oh wow, now they're selling that hard. That might be enough for me to try and get involved here. There's that fruit fly tried to land on me. I will do more learning. It's only been a week since I've figured out futures order flow. Yeah, I feel like you have to watch it for a couple of months to really understand what you're looking at. So, and it takes a while for your brain to sort it out. $33.48 at 26, showing up as a relatively large order. The deltas have definitely turned south here. In fact, since the news, it's been almost 10 to 15,000 worth of selling. Anyways, when I was a missionary there, one of the places I served was Lawrence, Kansas, which is where the university is. And that university was very, very liberal. And so that's like the one liberal county in like all of Kansas. Okay. And one of the people that we would visit frequently was a French teacher. Okay. So he was also like very, very liberal and like kind of, you know the type, right? And he was talking about stuff and it was like, well, I've never had caviar. Where would you have that? And he's like, you've never had caviar? And so he made us like toast with caviar. And and I mean, it wasn't like real caviar. It was like green. It was like green eggs. So it was like cheap caviar, but it was so good. I was like, wait, who needs the real thing when you got this? This is great. And like, but the thing is that in a place like that, they had that sort of thing. I could go to every store or I can think of here in Utah. I don't think that I would find caviar, not even like fake caviar. If you figured it out, let us know. I still don't understand it. Why limit orders move the market and now one rate? Well, okay, so let's talk about this because there's kind of two things going on here, right? One thing is that there is kind of a tendency for things to happen, right? But then there's also the S&P 500 doesn't necessarily follow that. Is the problem. Okay, so this is why I really think if you want to learn order flow, you should watch the treasuries first because it's so obvious in the treasuries. Okay, so what will you see in the treasuries? Well, cumulative delta and price tend to move together, especially on a good trend, right? So what I like to see is we're moving down and cumulative delta is moving down, right? In other words, the market orders tend to predict which way it's going. Let's not say predict. Market orders and price overall tend to be in agreement. Okay. And when you look at the limit orders, I have a couple of metrics that can let you look at this stuff, but I don't have them on my chart. But some of my speculators, Seth, indicator suite can kind of show you those things. Oh dear. What happened to our camera? Overheated. I thought I had the fan on and I didn't, so I'll just wait a little bit on that. I'll turn it back to basic. I'll turn it back to the chart. Anyways, so if you look at like stacking and pulling, what you will often find is that the orders in front of those market orders will pull. And so the side that you're seeing more pulling on is where price tends to go. But a lot of that has to do with, market orders are coming in and the market makers are pulling their orders, right? That's what you're going to tend to see. And so a situation where there's a lot of absorption and market orders start to dominate price. For instance, if we had this move up here and cumulative delta was still decreasing. And even in this situation where we've moved up a little bit and cumulative delta is a little flat, does kind of like perk my interest, right? The situation where the limit orders start to become more dominant, like really, really sticks out in the treasuries, right? Because again, like the way that I would think of it is the limit orders are the market orders and the limit orders are the market makers and the market orders are like informed traders, right? So the informed traders know which way it's going and they tend to dominate price, right? It's just that like in the S&P 500, because it's so much of a derivative, it doesn't always work that way. When you look at it from a high level perspective, it will tend to still follow that. But like especially on a micro scale, like on a minute to minute basis, the S&P 500 is kind of weird like that. So that's where it's kind of like a lot of people, they start out with ES and some of the things that you might learn about order flow end up like you watch the order flow in ES and you're like, well, that's not what it's actually doing. And as far as I can tell, the S&P 500 follows the order flow less than other instruments because it's a derivative. It's much more of a derivative than these other instruments, especially the treasuries. So what you have to do in ES is you have to understand that order flow stuff. But that's why I would say like learn that order flow stuff on the treasuries. And then over in ES, you're also going to have to add in watching the options, understanding how the index works and the individual stocks work and all of these other things, right? ES is so much more complicated of an instrument to trade. Like the professionals call it crack because it's, it's like practically gambling. It's addictive, but it's really hard to have an edge there. Because so much of that activity is just random. Whereas in the treasuries, when it's just doing random stuff, like it's usually really clear to us. So I'm usually like, well, there's no reason for it to be moving. Yeah, it's faking it. It's not actually going to break out, So these sorts of things. Like the treasury usually doesn't move very much unless there's a reason, unless there's a good reason. In this one, I think, there's some flow. I was waiting for the news, and then, it ended up being a net sell. But I'm not really seeing too much flow here. So I'm going to guess that it's probably going to be relatively contained still until we get to the meeting minutes later today. Then we'll see if they really move off of the FOMC meeting minutes. If you learn the treasuries, you wouldn't go for the Mickey Mouse stuff. I tried gold for the candlestick charts. How good is gold for? Yeah, so I would say that gold is pretty good for order flow, but it is a thin-ticked instrument. So the thicker the instrument is, the more instrumental and consistent the order flow will be. So when you're watching gold, you will find those sorts of things. So this kind of comes back to this larger point, which is that I think that most people assume, there was somebody actually making a comment on a video, and it was like, well, I think a lot of people say, okay, I'm going to be an order flow trader, and so that means I'm only going to look at order flow and going to make all of my decisions based off of order flow. That's dumb. Don't do that. You should incorporate every reasonable piece of information that you can, right? The markets are not simple, and the more nuanced your strategy is, that works to your advantage. Other than that, it would, if it becomes difficult to execute, right? But that's where you do all of the preparation beforehand. You know what you're going to do, and then executing becomes simple, and you can still have ease of execution with a very nuanced, thought out strategy, right? But you're going to want to know things about that market that can potentially tell you, what the flows are going to be like. So like here today, we know that because there is a meeting minutes later today that is going to be very closely watched, there's going to be a lot of people hesitant to take on big positions until that happens. Right? So that's something that we know. We know that the flows are going to be lighter until that happens. We know that the liquidity, that the central banks are tightening things right now. Right? So we should expect overall on the month to see treasuries sell a bit again. Right? Unless something happens that requires like another injection of liquidity, like we did with the Silicon Valley Bank thing, which is probably the main reason why the treasury or the equity market is up so much this year. And the thing is with treasuries, there's all sorts of nuanced things about like how it behaves around auctions and all, how it behaves relative to other currencies. There's all this information about the instrument itself that I can go and find. And the information is out there, but it took a long time to compile it together. And I learned a lot from other people. Like I learned a lot from John Bottomley, told me about a lot of these things, right? Because I didn't know anything about the auctions and stuff before that. Okay. Well, gold's the same way, right? There's a lot of stuff that's like specific to the gold industry. So like if you worked for a gold mining company, you probably know a lot of this stuff. And you would know all of these things about like, where in the world do mines tend to be? Would a disruption in this part of the world disrupt gold supply? These are things that matter, right? I have found, at least for me personally, that it is much easier for me to get that kind of information on the treasury market because what happens in the treasury market is relevant to everybody. And so there's always discussion online about what the Federal Reserve is doing and what the currencies are doing and all of that sort of stuff, right? Whereas in the gold market, since nobody really cares, there's not a whole lot of stuff out there publicly for it, right? So from that perspective, if I was recommending a product to trade, right, I would probably say treasuries, oil. Oil would be the next one. The difficulty with oil is that it can be so volatile. You have to have a pretty decent amount of capital to realistically trade oil, even with micro oil now. Okay. But oil is there's a lot of good things about oil. Okay. And then, yeah, gold and silver are good. I would take a look at copper. Copper is a really important one. I don't know. Does copper have more volume than gold? I'll have to go and look at that. Also, wouldn't count out the agricultural products like corn. Corn is like the treasuries of agriculture. Corn, soybeans, wheat. Right? Those are all places that you might be able to play. You know. And I would probably put ES like down at the bottom. But ES is like the most popular thing. Why? Well, because there's lots of movement. It's addictive to trade. It's just I think it's really hard to find an edge in index futures. That's all. I'm not trying to discourage you from doing it. But what I am trying to say is that you should choose your product based on you knowing something about it. You having an edge, a knowledge edge in that product. You know stuff about how that product and that industry and so forth works that most people don't. Right? Will FX such as Euro USD be too complex to trade as a beginner too? Okay, so the issue with Forex markets is, okay, so we have FX futures, but the FX futures are still just reacting to what is happening in the larger Forex market. And that is basically all dominated by the transactions between large banks moving money between currencies and stuff like that, right? And not only that, but because of the way that market is structured, there's not like the same kind of rules. And so what happens in Forex is you could be trading against government insiders and not know it, right? And then when Forex like really moves on something like that, like it really moves. So the issue with FX futures is that when you're uninformed, one trade can be so devastating to you that, you can just get crushed so quickly. So I don't find FX to be a super great place for retail traders to play. Like your retail day trader to play. Unless, again, something. You have a piece of information that's not inside information. It's public information, but it's something that has a good chance of predicting where it goes, and not everybody knows or pays attention to that particular thing, and then you go for it, right? And I think one of the things with trading is kind of being there and being engaged and knowing what's going on, so that when like the real big opportunities present themselves, you will be in a position to be able to actually take advantage of it, right? I think that's kind of more of this sort of thing that a retail day trader should be looking for. So like overall, retail day trader probably will not beat the index, right? What you're doing is you're trading performance for more consistency. You want to make a consistent profit, okay? But it should also, or the best case scenario, like a good strategy should also have a far right tail, which is to say that like if you do make money, every once in a while you'll make like big time money, right? Far right tail. So, and I think that, there could be some opportunities like that coming. I think that at first it was the 0 day to expiration options. I don't know if there's really money in that now, and I don't know if that's something that we could have taken advantage of, but that's kind of been the place where the market has been transforming, right? I have my own theory, which is that I think that in the next 5 to 10 years, that the money management industry is going to shift a little bit, because the government is introducing a test that will allow people to become accredited investors by taking a test. And that's going to open up private equity and hedge funds and all of these other things to a whole new group of people. That's going to be an opportunity, right? That's an opportunity that we might be in a position to take advantage of. Right? That's That's the way to trade, right? You just be there and watch for the big opportunity, because all of the people that I've ever seen that, like, we really know that they've made money and that they were like outperformers, like Anthony Crudelli. Well, why did Anthony Crudelli have his success? It was because he was like the biggest trader on when CME equity index futures went electronic, right? So he rode the wave on electronic trading before the robots got involved. Then the robots got involved, and then he had to change, right? But he made $1 million 1 year from trading. What's it called? Clearport or whatever it's called. There's always like some sort of transformation in the market that they were taking advantage of. So you want to look for those and see if you can position yourself around those. No one cares about treasuries, so I assure you they do. There could be another 1929. I'm gonna say no. So I don't know if we're talking about the day itself, but like let's just talk about a depression. No, there could not be another depression. Why is that? Well, and I'm not saying that there couldn't be an extended period of weak economic growth, sort of a thing, but the real reason why the depression happened was because we had an economic crisis and they did not print the money. They did not ease financial conditions, right? So the whole economy fell into a recession, and then they kept money tight. So if you run, that's what would be necessary to create another depression. And we understand enough about monetary policy now that any time that something like that happens, the Federal Reserve is going to ease monetary conditions. So you're never going to get something quite like the Great Depression again. Right? But there will certainly be crashes. And who knows? Maybe we have not seen the largest crash of our lifetimes yet. 2008 was pretty spectacular, though. It would be hard to beat that. It would be hard to beat that. There's definitely a possibility out there, though, that like all of the hedge funds are vulnerable to the same market problem at once and go under, and then that could be a real doozy, right? Because all of the risk in the market has been pushed out into these essentially unregulated areas. And so I haven't seen that little fly. I don't want to call it a fruit fly, but because I think it's coming from the plant. But I haven't seen it for a little while, and I'm wondering if I like swallowed it. Where does all this printed money go? Well, it goes into the economy. So think, for instance, so like I think the student loan issue is a really great way to illustrate how this works, because it's student loans, and it's a big issue and everything. But okay, when you take out a student loan, you're literally printing money, right? The bank just puts an entry in a table in some database somewhere and creates money and gives it to you, right? Okay, so you take that money, and then what do? You go and you purchase your education and all of these things with it, right? So now this money is now out in the economy. Apparently, the universities take that money and go and invest it into markets often, right? So that money is out floating around in the markets, and then eventually other money that comes to you from working later will be paid back to pay the loan off, and then that's the money coming back out of the economy, right? If instead the loan is forgiven, then what that means is that all of that money that would have been taken out of the economy gets redirected into discretionary consumer spending. And then the result is that you tend to get consumer and price inflation, right? Because it kind of matters not only how much money there is, but also the velocity of money and what assets the money actually goes into, right? And since the pandemic, we had created a perfect storm where there was tons of money floating around, and it all went into the things that people wanted to buy. And so you got the big time inflation because of that, right? Okay, so a similar thing happens with like Silicon Valley Bank, right? It's that the Federal Reserve is doing things to ease monetary conditions, and what that means is that banks are able to do more business, right? They do that business, and then that business tends to get put into, like, again, stocks and stuff like that. And so you have stocks move up. Well, okay. So I think that people mistake a Ponzi as something moving up and being valued very highly, even though there's not actual real value underneath of it. That like, if it's, you know, if I go in and I buy something and the value of that goes up simply because of me buying, then they say like it's a Ponzi. When all of those people sell, then it's going to collapse. Okay. Well, that's true, that like if you sell it, you're going to have impact on it when you're selling as well. And that there could be many assets, companies, things out there like that, you know, have a real problem if you're selling it or whatever. Right. But that's not what a Ponzi is, right? A Ponzi is essentially a security that isn't actually backed by anything, and that anybody that's taking profits, they're receiving their profits from later investors. Okay, so that is not the economy, right? Because there is something actually backing U.S. currency, right? It's the U.S. currency is basically backed by the entire U.S. economy. Oh, there he is. I definitely didn't swallow him. Okay. So the economy is backed by something. It's not a Ponzi. Right? And I guess there's this bigger thing that is like, it seems unfair, right? You have to work to get money. You can't just print it out of nowhere. Well, that's actually not true. That's not true at all. You can print money just like the next guy. You can go to the bank, take out a loan, and then you have to pay that money back. And hey, guess what? Like when the government does that, you have to pay it back, right? They issue treasuries, and then on a periodic basis, they pay the owners of those treasuries a coupon. And then at the end of the maturity date, they have to give back the full amount that they had borrowed, right? The government pays it back, right? You can print money as long as you can show you have the ability to pay it back. You have the cash flows and the income and whatever to pay it back, right? So it's so unfair, like when you get to people that are rich and then they have the ability to borrow lots of money and to fund new business ventures, and then that helps them, you know, that venture be more successful, and that seems unfair. But the reality is that everybody can print money. You have to go to a bank to do it. Right? And the whole thing is that the amount of money in the economy that we have found, it is better if we can adjust that. Because before, when we were like on a gold standard, for instance, so the amount of money in the economy is dependent on the supply and demand for gold, then that would affect your money supply and you would have no control over it. So if there was something happened, like if all of the other banks of the world decided to dump their gold on the market, then your currency, which is tied to gold, is suddenly less valuable. And then you have a recession. And how do you pull yourself out of the recession? Because you can't do anything to actually spur that investment, because you can't make any money unless you make more gold, right? And so that's where we came to, the money supply needs to adjust based on the conditions. And the only way that we can do that is by having a body that's elected or that's confirmed, what is the word? President picks the people and Congress confirms them, put in there, and then from there on, they're an independent body with a strict mandate about what they're supposed to do, that can look at the financial conditions and try and make the best decisions based on what they know, right? It's not perfect, but it's a lot better than your currency being subject to the whims of the commodities market, right? Essentially, we are better off with the money supply being malleable, right? Now, what is the downside of that? Well, the downside of that is you can get inflation. Now, generally speaking, we want to have 2% per year inflation. And they say that's an okay amount. And that encourages investment. And so that amount of inflation is actually considered to be a good thing. Although I don't know if we have a whole lot of, ways of proving that. Okay. But every once in a while, the politicians go crazy. And they start borrowing too much, and they do other policies and things like that. And then you get inflation, and there's the downside, because under a gold standard, they wouldn't be able to do that. Right? And that's what it all comes down to. Now, I saw this funny thing the other day. It was from Warren Buffett, but I had never seen it before, where he was saying, I could totally solve. I think we could solve the deficit within a year. All you have to do is pass a law that says that if the deficit goes above 100% of GDP, all members of Congress and the Senate are ineligible for election next time. And that's all you'd have to do to fix it. He's totally right. Isn't the dollar technically backed by... I wouldn't say that. The U.S. economy is a lot broader than just oil, right? Oil is just a teeny tiny little fraction of the U.S. economy. What you are getting at instead is that there is always a strong demand for dollars internationally. And one of the reasons for that is because so much business is done in oil. And because oil is one of the primary things that countries are involved in, currencies buying and selling and so forth, right? That means that all of those countries are involved in the dollar, and then that, provides all of these other things that they would want to buy from us, right? So the worry is, if the world doesn't do its transactions for oil in dollars, that demand for the dollar would overall go down. And then if demand for the dollar goes down, you could enter into some sort of a spiral sort of a thing. I don't think it would actually work like that. I think that it'd be much more self-correcting than you think, right? Like if the dollar all of a sudden started spiraling down, well, then there'd be all these countries that would then want to start buying oil in dollars again, because it would be more profitable for them to do so, right? You would really need a really big crisis of confidence to really have this kind of dollar crash crisis sort of thing that people like Peter Schiff and their ilk are always going on about. be very difficult. It's not like it's not impossible to happen, but I don't think that it would happen the way that they're talking about. Then they get rid of the old gold standard at the same time as pricing oil in dollars. Well, there probably were some things in the 70s under Nixon that kind of happened at the same time. But you'd also have to realize that the shift away from the gold standard was something that had kind of been slowly going on for like 50 years, right? Because, you know, it used to be the dollars, the dollar really was just a proxy for gold, right? But then it kind of came to, well, okay, like dollars are just dollars, but you can exchange them for gold if you want. And then what happened was, these other countries, and I think France was one of the ones that was doing it in particular, was saying, well, we don't think that you have the gold, so we're just going to exchange all of our dollars for gold and clean all of your reserves. And so that's when the US said, okay, now we don't do that anymore. So it was like lots of little things over the years that caused it. And the change that happened under Nixon was just like the last straw sort of a thing, right? But the reality was that it had been drifting that way for a long time. And quite frankly, it was inevitable. That's the other thing, is that, like, I think people have this idea in their head that, like, oh man, if Nixon wasn't so stupid and had realized what he was doing at the time and had not decided to get rid of the gold standard, then we could still be on the gold standard today and like everything would be hunky-dory. You know, we wouldn't have these economic problems with that and so on and so forth, etc., etc., etc. No, it wouldn't have happened. The reality of the situation is that the world changed so much and our monetary systems had to change with them. And the monetary system changed because of the need and not the other way around. I think that people have this idea in their head that, well, they made these changes and then all of the corporations came in afterwards and took advantage of them and yada, yada, yada. No. The reality was that, like, our financing needs and so forth just exceeded what the gold could do, right? Like, corporations were too big at that point. You know, like, think about it. When you have, like, a company like Apple that's worth multi-billions of dollars, right? Like, it's literally worth more than the GDP of the UK, right? Apple is worth more than the GDP of the UK, is my understanding, right? How do you what if a company like that needs to do something, like they want to buy somebody out, or they, you know, how do you finance that sort of stuff? How do you manage and move and deal with that amount of money? You simply couldn't do it under a gold standard. There's not enough gold out there to do that. That's why it changed, right? And, you know, what happened during the two world wars is that those were so big, and the financing costs of those were so big, that's kind of where things moved, and everything got bigger and bigger and bigger, and then everything became more and more globalized. And that's the way that it moved. This is why so many of these concerns that people have out there are so warranted, though, right? Because what happened was our monetary system had to change to accommodate the way that the world was going and the way that a modern nation runs, essentially, right? The issue that we got now is that people are starting to say that, well, your free speech and your economic freedom and some of these other things kind of stand in the way of being able to run the next iteration of modern country, right? And this is where like social credit scores and things like that come in. It's like, okay, if you're generating content online, how do you verify the authenticity of it? The algorithm can't necessarily think for itself and say, okay, here's this thing this person claims. What is the claim? What's the empirical evidence for it? Go in, or if the empirical evidence isn't there, go and test it itself. Like the robot can't do that, right? The robot can only just look at you and say, okay, how reputable is this person? Except for that we don't have that data. So then they create the social credit score so that the algorithms can make those determinations. That's the way it's going, right? And it kind of seems like it's almost inevitable, except for that we know that those things would infringe upon rights. So, yes, we should absolutely be concerned about those rights being taken away. Yes, we should. Because there's going to be a lot of forces in the world that are going to, there's going to be a lot of pressure for it to change, essentially. And you're really going to have to come in and say, no, I care more about my freedoms than I do about the potential money that you might make from it. Well, only about 10 minutes left. I guess we did technically break a new low there, right? It's like they came back, they sat there for a while at 27 and then moved back down. And it's still kind of like what I said at the very beginning, which was like, well, I think you sell it, but over our time period, you might only make 4 ticks off of it or something. So we'll see how much further it drops here today. There is definitely a lot more volume coming in here on the sell side. Like when they were trying to push up there, we were pointing out all of the things in the order flow that was kind of making it weak. Like that they just really couldn't, even though they went bid several times, they just weren't getting anybody hitting 30.5, for instance, right? And it sat up there for a very long time. So it doesn't surprise me at all that, while it does surprise me a little bit that like the news was a pop, but then it sold immediately afterwards. But yeah, that happens. But then after that, they continue selling. It doesn't surprise me. Doesn't surprise me. Let's see here. Still have a little bit of time, so let me just come through here and double check if there's anything I've missed here. On the whole social media thing, if Twitter is going to go the way of the dodo, which I'm not sure it is, but I think that wherever Nick goes, that's going to have to be our primary platform. It's in your hands, Nick. Here, wait, does he have it? Oh, he has a website, nicktimiros.com. Now in bookstores, $1 trillion triage. Views. Then down at the bottom, he just has a Twitter. Oh. Nick Timiros is the central bank Federal Reserve kind of expert at the Wall Street Journal. He is called the Fed Whisperer because when the Federal Reserve has a message that they really want to get out to the markets without doing it in a press conference or whatever, they tell Nick. the Wall Street Journal has always kind of been the Federal Reserve's mouthpiece. So, he's just the guy in the position and everything. But yes. So as long as Nick's primary platform is Twitter, my primary platform is Twitter. But I have seen some things that make me wonder. Hopefully it blows over, and I would like to see Elon Musk be successful with Twitter. I've seen some concerning things. Oh, look at that offer. 24.5. It's iceberging on the bid a little bit as well. It looks like they're going for 23.5. It's a decent offer at least. And a few contracts hit there. Yeah, it may tick up and come back to it, but I think they've got a little bit lower to go. And the next big step down is 21. Who's Nick? I don't. You don't want to see Elon be successful with Twitter? It was still a good call. Well, my bigger order flow kind of like feeling that, like, yeah, go short. That for sure. For sure. I'd say that it was kind of like, yeah, I don't know if you really wanted, for what we're doing, I don't know if you really wanted to be in that, right? But like, if we're going to swing this, yeah, you probably should have just gone, like on the open, gone short, and then just ignored the rest of the session, right? but let's wait until Friday until we make a celebration of that one. But what I'm anticipating is that the next week or two that we will continue to see selling in the treasuries. I didn't see that. Ben & Jerry's. The United States was founded on stolen indigenous land. This 4th of July, let's commit to returning it. Is that, like, serious? Ben & Jerry's has always been woke, so I don't think anybody will care. I always prod my wife when she buys it. Which isn't often, but every once in a while she will. Be like, that they believe this, and this. I mean, that doesn't mean that it was okay to steal the land and everything, but like, you realize how unrealistic and dumb of an idea it is to return it all, right? Like, that'd be such a mess, legally speaking, economically speaking. What was I on here looking for? Oh yeah, I wanted to read what were the last couple of tweets from Elon, but it wasn't. I'm not getting anything. Oh wow, that was like a quick last 10 minutes. Now they didn't go lower there, but I'd say there's still a decent amount of activity. So this might be kind of like an area that they distribute a little bit, but I also don't think that 23.5 is the low of the day. But you got to be careful because again, we've got Fed meeting minutes. It might still be relatively contained before that. And then who knows which way it goes after that, right? In fact, I dare say, like, wait for the meeting minutes, hope that the meeting minutes end up being positive, and then go short off of that or something. If I was going to swing it. Maybe that's what I'd do. I don't know. Okay, it is time for me to get going. I will see you guys tomorrow. In the meantime, stay excellent, team.